Today, I am bringing you all a strategy which I have tested over 1,000 trades on. This strategy has an average risk reward of 7 to 1, and it only takes a handful of trades a day. Make sure you hit the like button if you're excited. Make sure you subscribe if you're new, and let's jump right in. For starters, I'm going to be showcasing Tesla with this strategy. It's the stock that I have found works the best with its current configuration. It's profitable on most other tickers. I know it does really well on NVIDIA. It does pretty well on SPY, actually. But for the current setup, it's very much optimized for Tesla. So that's just the ticker we're going to be going over today. I will show you all how you can change the setup later, though, if you would like to use it on other stocks, maybe some less volatile stocks to kind of help manage your own risk. But today we're going to be looking at Tesla, and it's a 5-minute strategy. So we will be on the 5-minute chart. This strategy takes both longs and shorts, and the prereqs for deciding those are as follows. The blue line on this chart represents yesterday's close, and the salmon line represents the 100 exponential moving average. In order to be eligible for a short, the candle you are looking to enter on must be closing below yesterday's close and below the 100 exponential moving average, and exactly vice versa for longs. If you're looking to long a candle, it must have closed above yesterday's close and above the 100 exponential moving average. Now, the crux of this strategy, why you enter, why you decide it's time to buy, is the change in RSI, not the value of the RSI. I'm really not concerned at all with what the value of the RSI is. I'm concerned in the change of RSI value from this bar versus the last bar. And if that change is either plus or minus 10, obviously plus for longs, minus for shorts, 10, that is when you enter this strategy. And I love using the RSI as a reason to enter, because let's just look at today, Tesla, actually. RSI is a measure of velocity. It measures how fast a stock is moving up or down. So it's a lot easier for the RSI to go from 40 to 50 than it is for it to go from 70 to 80. So it really, using an RSI difference as a reason to enter really ensures that you either get in on one of the first green bars or you don't get in at all, right? Because once the move starts, yes, you're still getting big green candles up here, but the stock just went from 177 to 183. You really telling me you want to be entering at 183 after a move like this? Probably not. And once again, the RSI change helps you do that. It kind of makes sure you only get in on the first big red or first big green candle of the move. Okay, so you know how to enter now. Where do we get out? The stop loss of this strategy uses the ATR, the average true range. So it measures the current volatility of the ticker and it multiplies that by 0.75. And that gives you your stop loss either up or down. So obviously on shorts, you take the ATR of the previous bar, multiply it by 0.75. That gives you your stop out. Same thing on longs. You enter your long, you take the ATR of previous bar times 0.75. That's where you get stopped out on your trades that are losers. Now, for winners, profit take, where do you get out? End of day. That's it. That's the only place you get out if the trades do work. And that's kind of getting to the entire point of this strategy. Your goal in this strategy is to be entering on the first big volatile candle in a direction and then getting out very quickly if you're wrong. You entered short here, it bounced, get out right away. Don't let this run against you. 0.75 ATR, keep your losers small. When you're wrong small. When you're right big. That's why we don't even have a profit target on this. Let the profit print. When you are right, let the stock print in your direction. And that's why you get such good risk reward with this trade, as you will see in the statistics in just a second. But if we scroll through some of the trades so you all can get an idea, let's go to some winners now. So here, you get an RSI on the candle before is at 31. The RSI on this candle is 55. It's actually a 14 RSI point difference. It's above the 100 EMA. It's above yesterday's close. So you go ahead and buy this candle. You set your ATR to is 70 cents. So you multiply 70 cents by 0.75, or you have your code do that for you. And it tells you where the stop loss is, most likely somewhere around 194. So you set the stop loss and then you let the stock play out all day long. You get out of this trade. You got in this trade at 194.7. You get out of this trade at 197.7. Nice 3-point move in Tesla there for you on that day. Let's go ahead now and jump into the statistics. So if I go over to the first sheet here, you will see the numbers from over the last year. In Thinkorswim, you can only test a 5-minute chart for 180 days total. So these are broken up into 180-day spans. But the most current, so today is March 20th, back to August 9th, you are up $12,641. These are on $30,000 positions, by the way. So realistically, not even that much money. On $30,000 positions each, you're up $12,641 on 217 trades. Now, this is going to scare a lot of people. The win percentage of the last 30 days, last 180 days, 20%. Total of the last year, win percentage is 19%. But as proven with this strategy, it is not just about win percentage. If you tell someone you have a 20% win percentage that doesn't know anything about trading, they'll go, wow, man, you're a really bad trader. But traders will understand it's win percentage times risk reward. Yes, it's a 19% win percentage, but you've got a $690 average win versus a $100 average loss. So just shy, it's actually 6.9. 6.9 to 1 risk reward on a 19% win rate is obviously very profitable. These are the totals from the year, of course, but so it's a strategy that involves a lot of emotional maturity. Can you handle being read most days? Honestly, a lot of people can't, and it's good coming into a strategy video like this for you to understand that about yourself. Can you handle being read most days? If you can't, a strategy like this probably isn't going to work for you, because unless you can follow the strategy to a T, then it's not going to work. If you start breaking your rules, the strategy is not going to work. Just like if you do get into, when you do get into one of these winners, can you not sell early? Because this strategy really, really thrives on just a handful of really big green days is what this strategy thrives on. There's so many just like small losers, maybe a small win here and there, but the strategy will go largely sideways, but then it'll have a couple of days like this where it makes, how much money did it make in this day? It made over $2,500 on this day. But can you handle when you get in a trade and all of a sudden you're up $800, can you handle not selling? Because if you start selling, it only takes a couple of early sells with a strategy like this to ruin the entire thing. If you ruin a couple of days like this, you're going to ruin the entire strategy. Say you sell here because you're up $700-800 and like, oh my God, I need the money, I'm just going to sell. You ruin the risk reward of this strategy by not really capitalizing. So this is a strategy that involves a lot of emotional maturity. So make sure you think you're capable of handling that before you want to move into trading in this sort of way. Now, this is from the last year. You guys have heard of survivorship bias. The number one issue I think people have with backtesting, and it's an issue you should have, I'm not saying it's wrong, is survivorship bias. A lot of backtests just show you code that is created and optimized to work on a subset of data. And of course it works on that data, right? You coded it to work on that data, so of course it works on that data. You can make anything profitable on a set of static data, right? But where you can avoid survivorship bias, where you can not become the banks that are collapsing out west right now. You guys have heard the regional banks in California are currently collapsing because their risk managers were only building in risk into the bank of environments with low interest rates. They had no plans for interest rates rising because interest rates had really never rose since those employees probably worked at those banks. So now that they're entering a period of rising interest rates, the banks are going under. You can avoid being that person by backtesting your strategies against different market conditions. You can avoid being those collapsing banks. You can do better than they can. So I have a couple of edge cases here, and I will run a lot more than this too, but for the sake of this video, we had a recent Black Swan event. COVID 2020, still pretty recent in the grand scheme of things. It's important to see how the strategy did during that. So from June 30th, 2020, back to October 2019, we ran the strategy. So this is during the COVID downfall and a little bit of the bounce back as well. It still made money. It made $4,000 on 191 trades, only a 13.5% win rate, but it was such a volatile time. Look at the average winner. Such a volatile time that it actually ended up being okay for the strategy because its average win was $870 versus $111 average loss, average return of $22 a trade. I also, whenever I code strategies right now, I always go and run them in 2016 and 2017, because if you were trading back in 2016, you will know that a 1% day on SPY back then was like, oh my God, the market's moved 1%. Whoa. The volatility was just so low. We are currently in a bear market where volatility is very high. We're all very used to seeing 1, 2, 3% days in SPY right now as normal, but it's always important, once again, avoid survivorship bias, test your strategies against multiple different market conditions. So I always go back and ensure that I run a test in 2016, 2017, run a test in that low volatility environment. And even back then, it made $3,300 over this 180 days on just 179 trades, 15% win rate. Now the average win and average loss are much smaller. Of course, guess what? It's less volatile. That's why having ATR as your stop loss works really well, because when it's less volatile, you can tighten up the stop loss. You don't need to let it run as much. You know it's less volatile. That's why I think this strategy is still profitable, even in low volatility situations. So that is over 1,000 trades tested. Just right here on this spreadsheet. There's over 1,000 examples of this strategy working over time. Hopefully you guys did enjoy this video. I'm going to actually give you all this code. I started wrapping up the video. It's not over yet. I will give you all this code. There will be a link in the description down below. When you upload the code, so let me show you how to do that first, actually. You're going to copy the link in the description down below. Don't click on it. For whatever reason, when you try to click on the links, they never work. Just copy it and then go to open shared item here. Paste, preview, import, and then you will see, if you go to studies, edit studies, strategies, I will name it Treyding something, Treyding RSI move, something, I'll name it. And you'll be able to search for it here under your strategies tab inside your studies. I want you, first things first, to please not just take this code and trade it. I give you all my codes so that you all can come in. I'd click this little scroll here, by the way, if you don't know how to do that. You all can come in and look at my code and get ideas of how I'm making these things using ThinkScript. And so with a code like this, you can change the inputs. This RSI amount here, if you lower this to like 5 or 6 or 7, you're going to find that this strategy works better on other stocks. The RSI amount at 10 is pretty high, but Tesla's a pretty volatile stock, right? So you can change a lot of these variables in here as well. But the point I was trying to get to, please do not just take this strategy and go trade it. I never want you to watch any strategy video and just go trade it. That's not the point of a strategy video. The point is so that you guys are learning some ideas of how I trade so that maybe you can implement some of those ideas into your own trade strategy, what you find works the best for you. Every trader is different. You can't just trade like I can, and I can't just trade like you can. We have to figure out from each other what kind of we're doing and kind of mold it to fit each other's strategy. So make sure, please do not just take this code and go blindly trade it. That's the video. Once again, over 1,000 back-tested trades in this video. Hopefully you did find it useful. If you did, could you please hit the like button? It really does help. And if you're new around here, hit the subscribe button. We're on the way to 3,000 subs on this channel. Thank you all very much if you are subscribed. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.